Many traders consider divergences as the most reliable use of the RSI indicator, helping to inform trading decisions. Back after this brief message. Darwinex is a UK FCA-regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial. When the values of the RSI indicator form a divergence with price action, this often provides a valuable clue that a major reversal in price is about to occur. Let's take a closer look. This study of RSI is all part of the Spotlight on Indicators series, and you can get access to all episodes in the playlist from a link in the description. Last time we considered a different characteristic of the RSI indicator, which were the signals that the indicator was overbought, as you can see here. So when the blue RSI line enters that overbought region, which I've got set at a level of 70 at the moment, very often the price action then changes direction to return to more neutral territory. Likewise, when the RSI indicator goes into that oversold region, which is a level of 30 on this chart, again, we very often see the price direction change, this time in an upwards direction. But then we finished the last episode looking at the RSI and the price action in this region. Now here, the first time the RSI enters the oversold region, the price does change direction, but then it makes an even lower low. And in conjunction with this, the RSI also for a second time enters that oversold region. But by looking at the levels of the price and the RSI can give a vital clue about what's going to happen next. So looking at the price action first, because we're in a downtrend, we want to concentrate on the lows of the swings. And here we can see that we get a lower low, but then comparing this to the lows of the RSI, we can see this is actually rising slightly. And when there's this difference where the price is going down and the RSI lows are getting slightly higher, this is what's known as a divergence. And many traders feel that it's the RSI that we should pay attention to more than the price. And the fact that we've got a higher low in that RSI is often indicative that the price will now change direction. And in this example, we can see that's exactly what happens. Let's take a look at another example and consider these two lows here. Now, if we look at the first low on the left-hand side, we can see that this registered as oversold with the RSI. And shortly after this, price did indeed begin to go upwards. But then we experienced this lower low on the right-hand side, and this time, this didn't even register as oversold with the RSI at all. And so we've got an even clearer divergence in this case. And following that, the price changed direction. Now, I just want to compare this to what I'm calling an RSI agreement. So if you like, this is where RSI is confirming the strength of the price move. And this time I'm going to switch over and look at the example of price moving in an uptrend. And when that's the case, we're interested in the highs of the swings. And so we can draw this line here between those two high values. And by doing the same with the RSI, we can clearly see here that they agree. They're both going in the same direction, so we don't have a divergence in this case. Now, what this means is that RSI is confirming that the uptrend is still a strong uptrend, and it's giving an indication that that uptrend might continue. And as you can see, that's what we get, and we get another swing high, which is higher than the previous. But let's now study this next swing. Here, we do get a divergence on this next cycle of the uptrend. So we got our new swing high, which was confirmed by the previous RSI agreement, but this time RSI diverges away from this upwards movement. And we get an initial downturn in price, but it's not as immediate as some of the others that we've seen. But if we perform a further analysis of the swing extremes, we can see we get a second divergence here, and this time we get a much more aggressive reversal in that direction. Okay, so I've now covered two of the main characteristics of RSI. We've looked at overbought and oversold signals, and we've looked at RSI divergences and agreements. So now we're ready to go to the next stage, which is looking at the stochastic RSI. So I'll be covering how this variant of RSI is calculated and looking at how it might specifically address some of the issues that are encountered with RSI. I might also slot an episode in here about the particular version of the stochastic RSI that I'm going to be using, so that if any of you want to follow along with that, then you can. But after that, I'll be looking at specific trading strategies that I'll be using to compare the effectiveness of the basic RSI with the stochastic RSI. Before you go, would you like to find out more about how Darwinex helps thousands of traders just like you to attract investor capital? If so, either click on the Darwinex logo on the screen or find other links in the video description below. Now, until next time, trade safe.